All right, everybody. We are live. And it is time to do a market open. Hello. Oh, it went green. Hold on. We're going to do this again. There we go. Oh, well, we're black and white. Oh, well, we're going to be black. I love it when it's black and white randomly. That's a great way to start the week, being black and white for no reason. But why not? It's cool. It's hip. It's unique. Hello. What's up? Black and white to start off the day. I don't know why it's black and white. It's black and white. Richard, what's up? Bacon Bombs, what's up? Classy start. There is a fun green cloud. Yep, there is. Love the color. Are you for real in the level 6 upgrade? Yep, we're going to talk about it. Richard, happy Thanksgiving. Happy Canadian Thanksgiving. All right, so let's get into the big news right now about Palantir. Obviously, very important news. So let me pull it up real quick. This is stuff I did not expect to get this news today. I mean, we've had just a string of more and more news coming out about this company. First of all, happy Monday, everybody. I hope everyone's doing well. Hope everyone's doing okay. Hope everyone is ready to have a good start to the week. We have the market open in 5 minutes. We'll get back to this even more after the market open, but Palantir announces expansion of federal cloud service with DOD IL6 accreditation. Now, being a level 6 supplier or vendor to the DOD is a pretty big deal. It means that you have security access that a lot of people don't have security access to. And so it's going to be a good week, even amid is green. And so Palantir getting this, they were level 5 for a while, and it seems like they just got level 6. So Palantir is excited to announce that its federal cloud service offering has received a DoD impact level 6 from the Defense Information Systems Agency, DISA. With this accreditation, Palantir expands its cloud offering to include a new secret region, having initially achieved FedRAMP and I-Level 5 with the release of Palantir Federal Cloud Services in 2019. They joined Microsoft and Amazon Web Services as one of only 3 companies with an IL6 provisional authorization from DISA for their cloud offerings. Now, again, IL6 is a strict security and compliance standard required to process classified data for cloud-based workloads. Palantir Federal Cloud Service IL6 is designed to serve U.S. federal entities, including the Department of Defense and intelligence community, in their most sensitive and defense and national security missions. Super cool. I mean, we kind of knew this was coming, so it's not like some major surprise. They had level 5 for a while. Obviously, Microsoft and Amazon, much more established companies than something like a Palantir, were able to get IL level 6, but it is nice to see Palantir finally get this. CTO of Palantir, Akash Jain, says, "We remain steadfast in our commitment to providing leading software technology to the U.S. government. Alongside Deputy Secretary Hicks' top innovation priorities in enterprise cloud computing and artificial intelligence, we are excited by the possibilities of what our partners across the government and industry will develop with federal cloud services by Palantir." And again, when you have IL6, that means their ability to just land more contracts and get into more doors is important. Mitchell Sykes, senior architect of federal Palantir technology, said at Palantir, "We have unique design systems that address the unique constraints and mission goals of our partners. This accreditation is a testament to that. This expansion will address growing scale consideration of robust data protections. The department adopts new digital capabilities and critically will provide even easier access to people who rely upon software every day for their most essential missions." Not bad. Not bad at all. Okay. Wow, Midwest is in the building. What's up, Midwest? I know you've been busy. Thank you so much for being here. Someone says your screen is green. Does that represent a glare coming up? I hope so. I hope that my green screen represents a glare coming up. It's weird. It's like you plug in a good camera and it randomly goes green and it just stays green. And it's like, all right, if you want to be green, then we're going to have the market open as green today. That's what we're going to do. All right, let's get into the actual market. We are green in the pre. Oh, well, okay, never mind. We're red in the pre. Some of it was, oh no, here we go. Yeah, we're a bit green. It's not crazy green, but it's not bad. Like, so for example, let's go to Palantir. What are we at? 819. Okay, so we're like 0.49% green. Tesla is up $1. Twitter is up 40 cents. Spotify's up 1%. Neo's down. Tattooed Chef is up point. So like we're green. It's not the. It's going to be really interesting to see what happens market open. Either it's going to be green and it keeps building upon its green momentum, or it's going to flop and it's not going to be green at all. Like It's one of two things that are going to happen. End phase at 252. End phase is down a little bit. The reason I put green in the title is when I woke up, I was up like $700. I was up like 2%. I was like, oh, market's green. Well, I guess we're going to see how green it becomes. With the market open in about 40 seconds. Meow, what's up? Apple's up. Tesla share buyback. I don't think Tesla's doing a stock buyback. That's probably not going to happen. I wouldn't imagine that. Let's go to Coinbase. Someone said Coinbase. Let's check that one out. Coinbase is up 0.75%. Yeah, so this week is going to be interesting. Last week was a roller coaster. We started off on the S&P at 357, went up to 375. Then where are we at right now? We're probably at, 360? Now we're at 362. It's up a little bit in the pre-market. Either this week we test the June lows again or the new all-time lows we started at around 357, which is what theoretically I think a lot of analysts are thinking we would do, or we just keep pushing forward. A lot of analysts, we had to talk about what Kathy Wood is saying because she just put out a whole new podcast talking about her thoughts. I mean, she thinks she's calling out J Powell, basically thinking she said he thinks he's a reincarnation of Paul Volcker, and he's not. And so she had some nice words for him. All right, here we go. October 10th, 2022, 10 days into October. We have about 3 months left into the rest of the year. It is 9:30 a.m. and the stock market in the United States of America, even on Canadian Thanksgiving, is open. Wake your ass up if you are not awake, because you have to be up at one point to enjoy life. It is the stock market open. Uber at $28, Amazon $118, Pinterest $24, S&P opening up 363, up 0.3% from its lows. Coinbase 66.7, down 0.43%. In the pre-market, Palantir not holding what it was in the pre-market, being up. Again, the new IL6 certification, I don't think that's going to do anything for Palantir, or at least the stock price, because the stock price at the end of the day probably is just not going to be affected by any of these news, given the macro. Twitter, 49.54. We're going to see this week if that deal starts to get closer to closing. October 28th is when the trial is scheduled for it. Do we even get to the trial? I don't know. So we're going to see what happens there. Tesla, 224. Bitcoin hovering really nicely at 19.3. The reason I say nicely is because it's not gone lower. It's not gone higher. So if you have Bitcoin, at least it hasn't, dipped below 17,000. Obviously, Bitcoin has made itself ubiquitous for trading like a NASDAQ growth stock, even though it's supposed to be an inverse to a NASDAQ growth stock. It should be up during inflation, but it's not really been a hedge to inflation. And it's stayed pretty stable. So I do think crypto will have, important revolutionary things in the future. I just think right now it's probably not in this macro gonna benefit and give them monumental gains. SoFi going below $5. This is why I wasn't buying SoFi at 520. I kind of don't trust it's gonna stay above $5 for a while. I think we're in for a little bit more pain, and I'd rather get some SoFi below $4. So we got SoFi there. We got Meta 134. I spoke about this over the weekend. Did a bunch of podcasts on this. I'm getting closer to opening at least a small position in Meta, just because at this point it's trading at a stupid valuation. And so we're going to see from there. Ginkgo down 2% at $3. Oh, there we go. Ginkgo's at $3. My average on Ginkgo is $2.98. I will be very happy to pick up more Ginkgo below $3. So let's see if we can get that going. Tesla dip for me, next buying at 200. My dip is also ready for 200. If we get to like 205, 208, I'm ready to do that. I'm green with envy today. LOL. Happy Monday, y'all. Theo, what's up? What's up? Gabe says, I'm bullish for the next 6 months, extremely bearish for the rest of the bullish Palantir, extremely bearish rest of the stock market. If you want to make money off the market, buy long dated SPY puts tomorrow. Interesting. AMD low for the, oh wow. AMD hit its low for the year today. That must be like 62 then, right? Oh, 57, 60s. I thought we were still in the 60s. Goodness. Yeah, AMD is a very interesting story, man. Once there are some people who ran with the stock for a very long time and were buying the crap out of the dip in the low 100s. And you can't blame them because, you still didn't think it was necessarily overvalued, but the market just been absolutely brutal to AMD. I remember in like April, I was like, I like AMD under 80. We got to 80 in May or June, and I didn't buy it because I just felt like everything was going to keep going lower. And then it rebounded all the way up. And I was like, all right, I missed my shot. Now it's back here at 57. So the market has a nice way of humbling you. Tesla at 221, getting to even lower lows. The 52-week low on Tesla is 206. So that's like the number we should be thinking for If we break 206, they're probably going to go down a lot more. And that's where I think I would at least have some buys set up. I'm just not going to look for my Palantir for 3 years at this point. That is a good strategy, not to look at your Palantir for at least 3 years. I would recommend that. All right, let's hear Mohamed Elierson, probably one of the best analysts on CNBC. Let's hear his thoughts on what he's thinking of is going to happen with the markets. Why are you green? Honestly, Rizzy, I don't know. I guess my computer thought it would be a good way to do it.
Some economists fear that the Fed, humbled by staying too long and saying transitory, is now staying too long in terms of raising, and we don't know yet. We haven't had an earnings season. We don't know how it's really affecting things. They may break something. We may already be in a sharp slowdown. Maybe they stay at this party too long, the tightening party. You don't think so?
So there's two elements to this. Can they stop? Can they pivot? No, they cannot. They cannot because the data doesn't give them enough of a green light. But importantly, their credibility has been hit really hard. Will they end up overdoing it? Most likely, yes. So they've gotten themselves into this hole, and unfortunately, they don't know how to get out of this hole. There's no ladder out of this hole. People have to realize there's no ladder out of this hole.
Should we say, gee, you guys, your credibility was damaged. Now you've got to regain your credibility. Is that good for us and for the country that they have credibility, or are we paying for their mistake with a recession that we really, I don't feel like paying for their mistake with a recession just so they can regain credibility.
Well, first of all, you have no choice but to pay for their mistakes. And that's one of the tragedies of the situation. Yes, we're all going to pay for their mistakes. And some people are already paying. There was another concern that you brought up, Becky, this morning with Roger, which is it's not just about inflation, recession. It's also about financial stability. That's the third leg of this thing. So yes, Joe, I don't know how we can avoid paying for this mistake because they have been late. They mischaracterized inflation as transitory. When they finally recognized their mistake, they didn't act. Remember, in the middle of March, when we printed the February inflation print over 7%, they were still injecting liquidity into this economy. That's last March.
Mohamed, wait a second. When you say the third part of the equation, the financial stability, do you think there is the risk that things will be broken in the markets if they raise another 75 basis points?
This is the most front-loaded interest rate hiking cycle we've had for decades. We're coming from zero interest rates. The whole system got conditioned to believe that zero interest rates was forever, that injections of liquidity were predictable, and now we're adjusting. The UK has given us a warning sign.
But there are people in the market who still haven't taken the Fed seriously, so they have not gotten themselves to a place where they're not going to have massive issues if the Fed doesn't slow down?
So we have, first of all, this is the non-banks, not the banks. So that's the good news because the banks are in the middle of the payments and settlement system. The non-banks are not. So that's good news. Yes, there are certain, you can start with the zombie companies who are finding it much harder to refinance. And if they can get refinancing, the cost of this refinancing makes their numbers look completely different. Then you can go to various investors who over-levered. That's going to be an issue. So yeah, we have to keep an eye on the third element, which is financial stability. It's not just about inflation and growth. It's also about financial stability.
That's almost an argument for slowing down and maybe only going 50 basis points, if that, at the next meeting, just because it's not going to help your credibility. If you're doing this for your credibility, things break and you have to instantaneously backtrack like the Bank of England
I'm at 50.
Okay, so
I'm at 50. They don't give a damn, but I'm at 50.
What, you think they'll do 50?
No, I want them to do. I think they should do 50.
They can't. They can't.
Well, I think
they absolutely can't. If they do 50, then we will be at this table talking about stagflation.
So we have some people on saying, who was it, Mr. Wonderful? There are companies that they're not even noticing any slowdown at all right now. And then I don't know if I think that employment reports are lagging, so that could happen really quickly. We could see some issues there, or maybe not. But is the economy really, really still strong? And can we use 3.5% as an actual real employment number right now?
So I think the labor market is strong with one really important qualification, labor force participation. And that came down again. And remember, there's two answers to our issues: more labor force participation and more productivity. That is what we need. And that solves so many issues in the economy today. And the labor report was strong across the board, except for labor force participation.
Do you think Mr. New Normal. Do you think because you sort of coined that term, do you think there's a new normal in terms of how we do business and how we work in this country in terms of hybrid, remote?
So I think of us as, and you're not going to like this, Joe, but as on a bumpy journey to a new destination. So what does the new destination look like?
Yeah.
First, tighter financial conditions. No more zero interest rates. No more injections of liquidity. That's gone.
People at home in their basement on Zoom calls?
No, hold on. The second element is a different type of globalization. And the third element is we're going to struggle at the global economy to provide high growth. We don't have potent growth models anymore. The US is in a much better situation than other countries.
Wow. So Muhammad is saying a couple of things. I mean, there's like 2 seconds left in that clip, so that clip is done. A couple of core things as we get back into the market. He's basically saying the artificial liquidity that we've had pumped into the market over the past 14 years, along with interest rates being near zero, conditioned the market for this type of growth. I mean, it's kind of like a Michael Burry argument, right? Which is that since 2008, basically 2011, the type of growth we've seen in the global economy, there's two sectors to it. Number one, we've had explosive tech companies, Apple, Google, Amazon, Facebook, and it's like, yes, those are true. But we've also had macro environmental conditions that allowed them to be explosive without any kind of core pain. I mean, yeah, we've had some issues like 2018. August was rough for them, but like they went fine. Even COVID didn't stop them. So if that environment has changed, if growth models have changed, the way we measure forward PE ratios, the way we measure pegs, the way we think about growth, if interest rates are high, inflation is here, and we've changed the macroeconomic situation of just a global economy, that leads to something like Nvidia being at 117, like breaking its 52-week low. Like in a market with artificial liquidity and interest rates, this would never happen. I mean, this is astonishing. Tesla here at 220, down 1%. Enphase 249. Nvidia is just getting destroyed, man. Like this is a good company. It's getting absolutely destroyed at 117. So that is something. Nvidia is going to be very bearish for the next coming 12 months. Yeah, it looks so. Many people doubted Jobs, Bezos, Musk, and many doubt Karp. Time will tell. Yep. I trust in Karp. I mean, I trusted him. 203 in the chat. Thank you, 203 people being here for the Monday morning. I appreciate it. The next earnings season will bring lowered forward guidance, and that will kill the overall market. The problem with the situation is that when interest rates go back down soon, everyone will have fresh memories of what happens in a low interest rate market in YOLO. That's a good point. And I think that's also what the Fed is scared about, because if they were to say, all right, we're pivoting, we're going to go down to 50 basis points or 25 basis points, basically saying we're not going to get to 4.4% interest rates by 2023 or 4.6. I know unemployment, they want to get to 4.4, something like that. Then, the economy rips. And I think this is Kathy's argument. So let's go to what Kathy has been saying. She's been saying a lot of different things, but overall, she does not think the Fed knows what they're doing, right? So like, here are some examples of how she's talking about the Fed. So let's go here. She says, for example, given the accelerated consumer preference shift towards electric vehicles, used car prices and the residual value of all gas-powered autos are likely to plummet, causing serious losses in the $1 trillion auto debt market. Basically saying that because ICE vehicles are kind of going extinct over the next 10 years, the Manheim Used Vehicle Index declined to 204.5 and is now down 0.1% from a year ago, meaning that the debt that exists in this auto market is not going to be able to be fulfilled since consumers are just going to electric cars, right? And the people who bought those ICE vehicles to be able to sell them are not going to have anyone to sell them to. Now, if that's the case, obviously this fits her narrative. If that's the case, Elon also put a nice little 100 emoji right there. Elon and Kathy on the same page. This means that the Fed doesn't need to raise interest rates. If things like this are happening, inflation naturally will go down. We will naturally have a sequential deflationary cycle that exists, which will overarchingly help the economy get out of the rough time that we are in. The Fed, though, has made a core thesis statement, which is that this is how we think about the economy, and we're not letting up from this. And it would seem very weird to imagine the Fed does not think the world should be in this way, right? Or shouldn't we should not include interest rates, increase interest rates just because of some things Kathy says. Amit, are you buying TGCF after your meeting with Jeremy? No, I'm not buying Tattooed Chef. I really don't know anything about Tattooed Chef, but I talked to him about it, and he's still very bullish on it. So everyone has their own picks. You know, I have some stocks that people probably would never care about, but I believe in them. So it's just everyone has their own picks. I watched a little bit of her weekly. This is the main point she made in her weekly, right? So this tweet right here. For those skeptical of our interest rate shock thesis, 13.5x increase in the Fed funds rates in this cycle compared to 2x under Volcker, the UK pension fund LDI debacle is proof of concept. Now, she talked a lot about what happened in the UK. For those that don't know what happened at the UK last week or 2 weeks ago when they stopped raising interest rates and they kind of like saved their banks, she went on a pretty decent rant on it. In her latest episode. And the rant was premised off this idea that if the UK did not do what they did, the banks that rely on the banks, meaning like the things that rely on the things that rely on the things, would have all collapsed, and their economy would have been not in a recession, but like it would have been one of the worst financial crises ever in the UK. And so the UK Fed had no choice but to step in. And she's making a similar comparison that this is exactly what could happen in the United States if the Fed doesn't pivot, because there's all these indicators that are leading, not lagging, but leading, that indicate that we are going to be fine and that inflation is going to go down and that there's not going to be any issue. So she does like this really, unique comparative analysis also with 2008 and what's going on with the UK and why the Fed in the UK had to step in. But notice when that happened, the market ripped. Right? Like the Fed stepped in and then the market in the United States, the market went up because it kind of showed a precedent for us that, oh, things are going to be okay because the Fed stepped into in the UK. So, they'll step in the United States as well. When in reality, it's like, that's not what the Fed wants to do. And that's not the signal they want to give. S&P still holding up strong, 362. We have some individual stocks that are getting hammered, like NVIDIA and AMD hitting brand new 52-week lows. Both of those stocks, like chips, are just getting, either this is the greatest dip buying opportunity for chips in a while, or chips are going to go through a lot more pain in the next couple of months. But everything else seems to be pretty okay. Let's go to ARK. I'd imagine it's under 40 today. 37, yeah. ARK's been stuck in this 37 range for a while. So there's where we've got ARK. Question is, how many ideas will Jeremy upload? That is a good question. Putin is going to launch nukes. I got a notification today that there was some explosion in Kyiv. It was a notification I got early in the morning. But I wasn't a nuke or anything, but like, it is kind of scary, man. It is, this stuff is not the easiest thing to see. Okay, let's go back to CNBC. Let's see what else analyses we can get. What do we got? Let's do, all right. We forecast a mild recession in the first half of 2023, which is basically what Mohammed I forgot his last name. He's basically saying as well. He thinks there's going to be a softer landing if the Fed can do it in a meaningful way.
I fear that you have some bad news for us because that you have a sense that there is still more downside to come.
Thanks for having me. We think so. I mean, earnings we're expecting could slightly miss consensus this earnings season. The downward revisions that we're expecting, we haven't really seen yet when you look out to the next few quarters. So I think, this earnings season could be okay. But when you look out to fourth quarter 2023, we think consensus is still way too high. We think margin expectations, given the inflation and the labor pressures that we're seeing, are too high. So, we still think that guidance is going to be one of the most important things that
this is not going to be
looking at.
This is not an earnings story we should be focused on. This is a guidance story that we should be focused on in the next 2 weeks.
We think so. The guidance that we've been seeing, the pre.
And it makes sense that they're focused on guidance because remember, AMD reduced their guidance from like 6.5 billion to 5.7, and that ended up hurting a lot of things on the market as well. So if we see more companies, like if Google comes out and says, hey, we thought we were going to do 80 billion, we're going to do 70 billion. I mean, that's going to be a lot of that's going to send a lot of shockwaves throughout the market. So it would be more around guidance versus earnings itself.
Pre-announcements, when you look at news stories for negative pre-announcements in August, they hit record levels. Last earnings season, you started seeing more commentary in terms of weak demand. So we think what corporates are saying and the guidance they're going to be giving may matter more than just third quarter results themselves.
What is the chance, though? You have also said that you think markets are much closer to your S&P 500 year-end target, which I believe is 3,600.
That's right. We've been looking for 3,600 for year end. So obviously one of the more cautious strategy teams going into the year, and we've now been very close to that target on the S&P. So even though we could be close to the levels that we're forecasting, could be the year end target, we think it's going to be a bumpy ride from here. We're likely to see continued volatility. We are looking for a mild recession in the first half of next year, but obviously if that's more severe than we're forecasting, we could see lower levels on the S&P. We've been highlighting, 3,000, 3,200 could be sort of a worst case scenario.
That's the worst case scenario. What's the best case scenario?
I think, we're getting to the point where sentiment, many of the measures that we're looking at have been getting more bearish. Flows have been starting to see outflows, but, not yet capitulation, not yet a buy signal on the sentiment indicators that we're looking at. So we do think that you need to see, kind of more of a deterioration in sentiment to really, give that buy signal on the market. The bull market indicators that we look at in terms of things that usually occur before the market bottoms, and not enough of those have occurred yet. Interestingly, the Fed usually cuts before the market bottoms. Maybe the market anticipates that a little earlier this year, but we're not looking for Fed cuts until later next year. So we think it's most likely that we'll see volatility continue from here, but certainly opportunities within the market beyond just buying the S&P 500.
But if you think just to clarify the point, if you think 3,200 is the low on the S&P 500, which would require some form of capitulation, I would imagine. I mean, some kind of dramatic downdraft at some point along the line. What would be the dramatic upside view?
Well, I think some of the sentiment indicators that we're pointing to suggest that the market could see healthy, whether it's high single digit or low double digit gains from here on a 12-month basis. Okay. Valuations, while they're not super predictive of near-term returns, if you look at it on an annualized basis over the long term, starting to suggest more healthy returns than we were looking at when valuations were more expensive going into the year.
As we've mentioned, Wall Street.
Okay. We're having some fun in the chat about this black screen. First of all, shout out to 230 people being here. We're going to take a look at a couple more videos, but let's get back into Webull. Apparently, you guys said ARK wrote an open letter to the Fed. Can you link that? Because I didn't see it. I didn't see it on Twitter anywhere. I would love to read what they're saying to the Fed. I feel like I did see this, though, and it was like a week ago. I'm not sure. I have a thesis for why ARK sold out of Spotify. Okay, I want to talk about that for a second. You guys want to know my thesis? It's actually it's actually a little funny. It has nothing to do with it's not that. So ARK's in the know. You know that video Kathy Wood puts out every week on YouTube or every other week where she's like doing this complex analysis. Oh, it's a Kathy retweet. All right, I'm about to check it out in a second. About like the macro and the Fed and all this stuff. It's basically a podcast, right? I mean, like it is a podcast at the end of the day. It's just they record the video of her talking to put it on YouTube, but it's a podcast. Now the problem is I went on Spotify and I tried to find the podcast and I couldn't find it. And I'm like, hold on, you guys invested $700 million. You were buying this company at $300, and you don't even put your podcast on their platform. Oh, here it is. Here's the open letter. All right, we're about to look at it. And I was just like, what? That makes no sense. How do you only publish your podcast on YouTube and not on the company that you didn't buy Google stock? You bought freaking Spotify stock. Like I couldn't find the In the Know podcast. And let me know if I'm wrong, but I honestly couldn't find it. And I was just like, this is interesting. Okay, here we go. Look at this. In ARK's latest In the Know video, not In the Know podcast, In the Know video. So it's not even on Spotify, even though it's an audio only thing. Anyway, that was like a funny thesis. The reason I think they don't put it on Spotify is because I don't think they're going to get any discovery for it, which is why they didn't do it. Which is probably why they sold out of the position. Okay, ARK extends an open letter to the Fed. Here we go. This is breaking news, October 10th. This came out 5 minutes ago. In ARK's latest In the Know video, out of concern that the Fed is making a policy error that will cause deflation, we offered some data in our data-driven model for the Fed to consider prepares its decision on November 2nd. Wow, so this decision is actually coming up soon. To be honest, as soon as I read the headline of this, it sounds kind of desperate because they're like begging the Fed to not raise by 75. but let's see what argument they have. In the face of conflicting data, the unanimity of the Fed's latest decision to increase the Fed funds rate by 75 basis points was surprising. Commodity prices are leading indicators upstream in the stream of processing. Most commodity prices have peaked, and except for food and energy, all are falling on a year-over-year basis. Without question, food and energy prices are important, but we do not believe that the Fed should be fighting and exacerbating the global pain associated with supply shock to agriculture and energy commodities caused by Ukraine's invasion of Russia. So they're blaming the Ukraine invasion of Russia on a lot of the different commodity prices increases that happen, and because those are trending down, that means like inflation is a little bit more artificial, right? In the face of single-digit sales growth, inventories at Walmart and Target increased 25 to 36%. She's right on that, a 9% increase, respectively, during the most recent quarter. Nike's recently quarter results suggest that inventory imbalances have worsened. Despite sales growth of only 3.6%, Nike's inventories increased 44.2%. In North America, its inventories increased 64% and 85%. In the auto sector, used car price inflation has measured by 54.2% on a year-over-year basis in April 2021. It made another run to 46.6% December 2021, but has dropped 13.5% year to date. That's what we talked about early in the stream. So she concludes by saying the Fed seems focused on two variables that in our view are lagging indicators. This is the key. She does not believe these two indicators are the best thing for the Fed. Downstream inflation and employment, both of which have been sending conflicting signals and should be a call to the questions Fed unanimous call for higher interest rates. During September and early October, the Fed felt vindicated in its tough stance by reports that inflation is measured by both the CPI and PCE deflator, excluding food and energy increased 0.6%. Excluding food and energy increased 0.4%. Including food and energy, the CPI and PPI fell 0.1%, which is 1% annualized. So she says if we include a lot of other variables, inflation is actually falling. Now, 1% is not probably as much as the Fed wants, which is why they're remaining hawkish. But to her argument, that's just going to like be a snowball effect and eventually go lower and lower. Initial claims for unemployment insurance declined and non-payroll farming employment increased to 260,000, but job openings as measured by JOLTS fell 10%. Oh, this is a big deal. This is a big deal. So her argument, so the latest jobs report we got out, the reason the market crashed even more on Friday is because we added more jobs technically, or we didn't add as many jobs. We didn't lose as many jobs as we thought we would lose, which is bad because the Fed wants to lose more jobs because if there's less money, less wage price spirals, more of a chance of a like recession at the end of the day, which sucks, but like that's what they want to do in order to get inflation to go down. Her argument is jobs are falling 10%. That according to JOLTS, we've already fell 1.1 million jobs in terms of job openings. Maybe people don't lose their jobs, but those jobs don't exist anymore, which means there's more, less people can apply for a job at that point, which is going towards what the Fed wants, which is less jobs to stop inflation. They ended off by saying, could it be that the unprecedented 13-fold increase in interest rates during the last 6 months, likely 16-fold come November 2nd, has shocked not just the US, but the world and raised the risk of a deflationary bust? It's so interesting because when you ask this question below, what if she's wrong about this, right? What if this is just like this poetic theorization and it's actually not correct? And the Fed takes their brake off the pedal or takes their foot off the gas and then boom, brake off the pedal. Wow, that was horrible. Takes their foot off the gas and we do have rampant inflation. I mean, there's two stories to this, right? And the Fed obviously must be looking at different data than Kathy, because if they were looking at this exact same data, they wouldn't raise interest rates because of course it's going down. And so when Kathy said inflation was transitory as well, and the Fed said inflation was transitory, they ruined their credibility. They're trying to gain their credibility back. The question is, at what cost do you try to gain your credibility back? I don't think anyone cares about ARK anymore. No, I think a lot of people care about ARK. Or at least a lot of people care about what they're trying to do, but I see what you're saying. Very well could be wrong. Someone has to be wrong. She was wrong about inflation being transitory. Yep. And she was so far wrong about Roku and Zoom and a lot of other stocks. So you couldn't imagine she's not down. Spotify must have declined to pay for podcasts. So ARK said, there's actually, I don't want to talk about it too much, but Spotify canceled one of their paid podcasts around climate change, and it pissed the crap off out of the podcast employment union. Yes, there's a union for like podcast workers. I didn't even know this was a thing, and they just canceled it because of low numbers. And it goes to show, if you're a creator on that platform, like if Spotify's not even going to renew their own original content, how do you expect them to give you any discovery with your audio? Which is what I think Kathy kind of discovered at one point. Wrong about Palantir as well. Well, she was wrong about Palantir from the governmental perspective, but I don't think she was wrong about the stock, selling the stock at the time she sold it, right? She was right about selling the stock. She sold it at $12. We have it at $12 in like 5 months. But in terms of governmental growth slowing down, we got like $800 million of governmental deals in the past month. And we just got IL6 certification for anyone who is new to the stream and missed the first 10 minutes. That was the big news on Palantir. And so if we have IL6 certification, which is a very difficult thing to get, only Amazon and Microsoft have it for federal cloud services, that hopefully should open up even more deals, right? If anything, it sets the precedent that Palantir is a force to be reckoned with in the governmental business. And so that's a big deal. Let's look at oil markets. OPEC is cutting 2 million barrels a day. I'm really curious on what's going on there. So let's talk a little bit more about it.
Not really 2 million barrels, but it could be significant, especially if we stop releasing SPR one of these days. What does it put the floor in, do you think, on crude?
Yes, I think it puts the floor. Thanks for having me. So I think it puts the floor in on crude around $75 a barrel. And the reason why that might seem a little bit aggressive on the downside is, there really is a demand issue going on here. And although those cuts last week did shift the narrative away from the pending recession and what's happening with demand in China, the reality is there is a demand concern going into the start of 2023. So this cut does protect the market. It might not be at 80 where some might think. It's probably closer to 75 if this recession does start to really take a bite out of demand and if China doesn't start to recover. Now, all bets are off if the recession is shallow and China does recover. These cuts just lit a fire under crude, took production out of the market, and you could see significant upside. So I really think the downside's protected at 75 and the upside is probably 100, 110 TI in the event that things turn out to be not as bad as feared at this point.
When things like this happen, Rebecca, we start hearing about some proposals that I think some of these you might not be a fan of. Number one, where's the SPR? How much we got left? That might be an issue. Number two, what if we ban exports? That just hurts demand.
Also, guys, put in the chat, have you seen your gas prices go up? Because I've seen mine, it went to like $3.19 a week ago, and now it's at $3.55 again. And I'm like, that's getting awfully closer to $4, and that's not going to be fun if that happens. So let me know if wherever you are, you've seen. When I was in Vegas, I saw their gas prices were like $4.90, $5.30, and I was like, well, Jersey's at $3.20, which is amazing, but now Jersey's just coming back up.
Domestic producers so they don't expand production. That's a bad idea. What if we cut off any type of equipment to Saudi Arabia used in military uses? I mean, all these things, are any of those good ideas, Rebecca?
So they're not terrible ideas. They just have bad market consequences, right? They're all trying to achieve political
good ideas that yeah. How many all good intentions lead to hell, don't they?
Right. So, and that's kind of the truth here, unfortunately. And I don't want to bash anyone's political ideas or what they're trying to achieve, but from a market's perspective, they're just not that effective. The one thing that could continue to be effective is the SPR. And I think you mentioned, your question was, where's it at? It's at around 430 million barrels. There's still some room to draw down there. And I know that seems scary. We haven't been here since 1980, but we are a stronger producer now. Our net imports are negligible. So the threshold of what the SPR has to hold is 90 days of the country's imports. That's a pretty small number at this point. So there is a possibility that we see continued SPR sales into 2023 if supply is compromised. It's not a terrible idea. It does put energy security at risk down the road, but we.
Bro, you guys are saying mid sixes. I couldn't imagine that. Mid sixes in California. Like, and what the analyst was saying there is like that those OPEC decreases, it's going to alter, how we think about the global supply of oil and gas. I mean, oil is so interesting, man. Planes need oils, cars need oils, ship needs oil. Like every form of transportation, if it's not electric, needs some type of fuel. And so that's how you get stability in those prices, because there's always this constant demand. But if you reduce the supply, like with this OPEC cuts, You know, it's weird because Biden went to Saudi Arabia literally so that this wouldn't happen. I mean, that's kind of the reason he's been gaining more popularity in the approval ratings, because gas went from $5 in like some places in California, like $8 down significantly. You know, even if it went from 8 to 6, that's not horrible, even though 6 is rough. And in Jersey, it went down to 3. Like, I mean, at 3.19, you're getting closer to the $2 range, you know, 19 cents away from that. I mean, that we haven't seen that in almost 2 years. So Palantir, by the way, down at 802, likely going to be going under 8, seems like. That's been great for Biden. Now we have midterms. When are the midterm elections? Let me Google when is the exact date for the midterm elections. Midterm elections dates. By the way, I'm going to be streaming it live the whole night. So we're going to be together discussing it. Tuesday, November 8th. Oh, we're actually pretty close. All right, November 8th. Get ready, guys. Get your popcorn ready. We are going to be following if the Republicans take over the House and the Senate, because I think they're going to get one of them. I don't know which one. Probably the House. I don't know if they're going to get the Senate, but we'll see what happens. 305 in Houston. See, that's beautiful. 305 in Houston. I guess we just got to see how it keeps going. All right, that's it for me today. Thank you all for being here. 211 people. We had 200 people consistently. That was awesome. Got some more videos coming out today. Check out the link in the description for my new startup. Would mean the world if you guys sign up to it. We're trying to build a YouTube of audio, so would really appreciate you guys signing up, giving me any feedback. High 6s in Australia. Man, that's crazy. That's crazy. Okay, thanks for the stream, Seth. Thank you for being here. I will see you guys later throughout the day. Market closed 3:45 p.m. We will see what happens Eastern Standard Time with the market. Nvidia hit some new lows. Market's hitting some new lows. S&P close to its all-time low. We'll see how it goes down. And we'll keep going throughout the day. Sweet. See you tonight for the market close. Yep, I'll be here for the market close. Thank you, everybody, so much. I love you guys for being here. It is Monday. Try to make the best out of this week. Mid-October, thugging it out, getting through everything. Hope you guys have a great day. I will see you in the market close. Bye-bye, everybody.